You're listening to Consulting Logistics, presented by Aborn Company. I'm your host, Tim Dooner. Thank you for joining us today. Huge show coming at you, folks. Today, Craig Fuller, CEO and founder of FreightWaves, is going to be joining us on the air. FreightWaves, in my opinion, is doing an absolutely amazing job of covering this industry in a modern light, as well as offering impactful tech-driven data solutions, and now an opportunity to bet on the freight futures market. Not going to even waste time here on much of an intro, as I can hardly wait. Let's get Craig on the line right here, right now, and see what's good in his world. Craig, welcome to Consulting Logistics, and thanks for joining us today. I'm very excited to have you here.
Glad to be here.
You know, Craig attended Baylor University, Go Bears and Lady Bears. He's also held top-level positions with U.S. Express Enterprises, Transcard, Madison Performance Group, and he's also the CEO of FreightWaves. If you've been on FreightWaves.com lately, anyone who's listening, you would know that they are up to a ton of stuff. So I imagine you have your hands full, but can you give us a brief on your current role as CEO and founder of FreightWaves? What does that entail in February of 2019?
Yeah, so FreightWaves is we have a couple pieces of our business, but probably the best analogy that people compare us to is Bloomberg. So Bloomberg in the financial markets has a media business. They do events, but their primary product is their market data and analytics dashboard that they have. And I think most people who've ever been into a brokerage office or seen it on TV would recognize the black screens and the charts, and they know what a Bloomberg terminal looks like, because that's effectively what sort of the marquee system that everybody emulates in the financial markets. Well, we too have a system, a dashboard that in many ways is inspired by dashboards that have come out of financial markets with charting and analytics and tools that help you analyze what's happening in the market. We go a little bit deeper with geography because freight is a geographical concept. And so, but Bloomberg also invests millions of dollars in their news product and have some of the best journalists in the world, and they don't really make a profit on their news. It actually loses money. But for them, it's a way to sort of contextualize what it is that they're offering, and they is a fantastic sort of marketing ambassador for the brand. And our news business is much the same. So FreightWaves, if you sort of broke it down, we think of it as community, which is our news and our events business. We think of it as our data and analytics business, which we call Sonar. And very soon we're launching tradable futures contracts in partnership with DAT and Nodal Exchange that will take place next month. And so that's really the three legs of our stool, if you will. And we've had a lot of progress over the past 2 years.
Wow. I'm sure a lot of people who are listening to are thinking, they're sitting there doing their logistics job and they're like, how do you get to that level? How do you wrap your mind around this? And I think it might stem back to your background because, you and I actually share something in common. We're both second generation in this business. And can you tell us a little bit how you got your start? I read your bio on your site, but can you let the listeners know you have a really interesting background about how you formulated this worldview of logistics and supply chain?
Yeah, so I had an advantage of actually being born into it. So my father started U.S. Express in 1985. I was 6 years old. Before that, he was involved in my grandfather's company, which was a trucking company. And so I grew up around trucking and saw my father build this successful truckload carrier. And as an entrepreneur, hit 80% of his time was dedicated to the growing of his business. He was a good father, but in many ways was inaccessible, except at times. So when you're a young boy, the best way to sort of interact with a hard-driving entrepreneur is to get to know what really drives him, which was business. And his business of choice was trucking. It just happened to be trucking. And because of that, I immersed myself in trying to understand how the business worked. And I got to see how U.S. Express used technology in the very early days to sort of gain an edge. And so it really impressed on me that technology is A, always evolving, and B, is instrumental in high growth businesses. U.S. Press went public in 1994. I got to see my father go on the roadshow for the public offering. It was at a time when most people held stocks in mutual funds, and it wasn't known. So I was sort of at a time in my life where I was seeing sort of the emergence of sophisticated financial markets and digital markets that we see today start to happen from the time I was in high school to the time I was in college. And I was in college during the dot-com boom and bust. And so in many ways, I sort of lived that out. And that impressed upon me the idea that markets can exist and markets are electronic and markets continue to evolve. I left Baylor, got my degree, and went. They had an air freight operation I went and did, and ended up setting it up on-demand expedited trucking company, which basically said we would go to customers and provide as much capacity, but we wouldn't guarantee a rate because we didn't know how to guarantee a rate. And we made money, frankly, from a lack of transparency, an opaque market. We were able to make money. But in order to be successful, when you have a customer call you and say, I've got 1,000 loads and I need you to pick them up in 3 hours, they're all over the country. Sometimes maybe 50% are in one city like LA. It creates a lot of stress on your system because you have a finite amount of trucks. And so we had to get very good about anticipating the direction of these various markets across the country. And through that, I learned that, A, how opaque the trucking market is, and B, that if you do a little bit of forward planning and you use data to understand what happens in these markets, you can actually forecast where demand is going to be well before it ever appears. And so it always impressed on me an opportunity to solve for that problem, to basically democratize the information that the larger carriers had and the larger freight brokers. And that was really sort of the inspiration for it. And so when we went out, I had a payments business, a startup that sort of fumbled its way to the point where we finally found success and sold it to U.S. Bank in 2012. But having said all that, I left in 2014. I wasn't a great employee and went out and started a business, the idea of creating futures contracts in trucking. The problem was there wasn't really any sort of ecosystem to support a futures marketplace. And you need a news business, you need a data business to sort of for people to want to trade it, because the traders need to feel like they have an edge on where the market's headed, and they need to be informed by news events that will impact the market. Well, that didn't exist in freight as the way it exists in oil, nat gas, and agriculture commodities. And so we went out and created FreightWaves.com, which is our news business, and thought, well, this would be sort of a niche news business. Well, it's turned into the largest news business in logistics and transportation globally. We're getting about 300% above our nearest competitor in terms of news, and probably get about 35% of all traffic. And I think the reason that we get so much traffic is that we're able to combine experiential people with tribal knowledge that have been, executives into space at all levels and all aspects of the space, with data and really quality journalism. So you get PhD level journalists combined with really strong sense of the market and sort of instinctual senses of the market through tribal knowledge, informed with data. It really is a powerful combination. So I think that's been the success of our news business and has driven a lot of what we do.
Yeah, I mean, one thing I've really noticed about FreightWaves, especially since on my end, I have to do a lot of research and doing a podcast and writing articles and writing white papers. I'm constantly looking at the news. And one thing I noticed that FreightWaves meant to me was reporting on freight and logistics in a modern, sophisticated approach. Most other sites would sort of segment data and technology from logistics just as they're starting to come together, and it didn't really make sense to me. But the approach that you guys take is that this stuff is all intermarried, and kind of hearing your background and the things you had planned all the way since back in like 2000 in the dot-com boom, it's pretty cool to see that all sort of come together now, because you mentioned that futures contract, right? And, well, what did you just do? You just kicked off the Freight Futures Roadshow. What the heck is that?
Yeah, so Freight Futures are basically, the futures contracts themselves. When we say Freight Futures, it's basically a futures contract that's settled against a trucking spot rate. So basically a futures contract is a financially traded instrument that is traded on a regulated exchange. These are regulated instruments. But basically, a future is what you would see in the oil markets or in the agriculture markets, or if you're a fan of great movies, Eddie Murphy's Trading Places, where they were trading the frozen concentrated orange juice contract, which is a real contract. It's not just movies. That contract actually exists.
Looking good, Billy Ray.
Feeling good, Lewis.
And the reason futures markets exist is that when companies make investments, whether they're farmers or drilling a new oil well, or in our case, buying a truck, there's a lot of risk in pricing because pricing is very volatile. It's a commodity, and so it moves up and down. And companies have a substantial investment in ensuring that price holds up. So if they go out and raise driver salaries by 12% or go out and buy a bunch more trucks, the anticipation of the person making that decision is that the market is going to hold up. Rates are going to hold up to support those initiatives. The problem is that if rates don't hold up and prices don't hold up because capacity is oversupplied versus demand, then rates will fall, and then the cash flows that the person that bought the trucks or raised the driver salaries fall apart. On the other side, for shippers, it's the same thing. When we talk to a very large petrochemical company, $17 billion oil refinery company, and they sell a lot of business to people like 3M and DuPont, big chemical companies. Their contracts are 3 to 5 years out for whatever petroleum derivative, and they lock in the prices over that period of time so that people like 3M have certainty of what the cost is. The problem with transportation is you can't de-risk that. You can't control the price. So the company, and it's delivered, so they have the basis risk on transportation. So if transportation costs shoot up 30 to 40% in a commodity, then it actually creates a loss for them. You're talking billions of dollars of potential revenue and, of hundreds of millions of dollars in margin that can go either way depending on transportation. So there's no way to de-risk it. So the reason futures contracts exist is to help both parties that are on either side of the transaction de-risk it and hedge their exposure to the volatility of an instrument, which in this case is trucking. And that's what the futures contract is all about.
Is there any issues there? Like, for example, when we're talking about like last year, especially last year, record number of truck orders, capacity was through the roof on both sides, LTL, on FTL, the intermodal market was filling up. There's big issues and a lot of dropped freight. In these future contracts, in a market like that, is there any risk of them not being honored?
So this is the great thing about financially settled futures contracts that are not commonly understood. First of all, there is no truck. I promise that if you buy a truck in a futures contract, in the FreightWaves DAT futures contract, I promise 100% of those contracts will service fail because there is no physical truck that ever shows up. There is no physical truck ever involved in the transaction. And so it's really important to understand. Effectively, what you're doing is you're making a bet or you're hedging. So you're either speculating or hedging on the direction of price. That's all you're trading. The analogy I like to use for people who aren't familiar with futures contracts is almost like a sports bet. And so you're in Boston, right?
Yeah, absolutely.
So are you a Patriots fan?
No comment. I don't want to get disowned by my brethren, but something about fanhood goes back second generations or back in the past, and you can blame my father.
Where'd you go to college? Where'd you go to university?
California Institute of the Arts.
Okay, so I don't know who their arch rival is, but we'll make a team up.
Well, like an ultimate frisbee team, probably. We didn't have like real organized sports.
So I went to Baylor University, and we're in the Big 12, and we happen to play Texas every year. So you have University of Texas and Baylor University, which is in Waco. And every year we know we're going to play each other. And my friends and I will make bets. My friends who went to Texas will make bets on the outcome of the game. And so basically, before the season starts, we bet $100. And basically, there'll be some type of spread given based on the anticipation of how the game comes. It's the same idea in futures contracts, because what happens is about 12 months out before the game is played, I have a very sort of opaque view of how Baylor will do, and my friends from Texas have an opaque view of how Texas will do, but there is some sort of history to inform us about who's likely to win, and we sort of know the states of the teams and so forth. As we get closer to that game that happens every, October, November, both of us are getting information about how well that game is going to be played. If we happen to have, if this was a futures contract, then as one team looks like it's more favorable and more likely to win, then one team goes up and one team goes down. The likelihood of a bet paying out for Texas increases if Baylor looks worse and vice versa. And so what happens in futures contracts is the same idea. You get closer and closer to the execution date or the maturity date of the contract, more information about the market is setting in, and spot prices futures contracts are reflecting that. They're either going up or down. When we get to the game is played. We both have a pretty good idea how the game is going to come out. We're much closer to the price. We're much closer to the score. And then the game is played. And there's a winner and there's a loser. And the referees call the game. And they say, Texas beat Baylor by 35 points. Now, I then have to pay the Texas guy, and I pay up. But what happened in that is very similar to futures contracts, because in the futures business, like the football business, I did not take the field in the Baylor to Texas game. The Baylor and Texas players had no idea that there was anybody betting on either position. It was an off transaction, if you will, an off exchange transaction. The only people that had a direct influence on the game are the players themselves. In our case, the trucking companies and the shippers, the brokers, trucking companies and shippers. And so they're the only ones that impact the outcome of the game. My bet, and the referees that call the game, my bet has nothing to do with the actual physical outcome of the game. And in futures business, there is nothing about our futures contracts that have a direct outcome to the physical market, because they're two separate markets. So DAT
Sure.
is the folks that they assess the market, they get the prices, and they create the score, if you will, off of all of the individual points. They play referee inside the game, and they post the end score that's then turned into a contract that's then played on the nodal exchange. It's traded on the nodal exchange. So think of nodal as the stadium, if you will. The referees are DAT, and the players are the trucking companies and the shippers that are in the physical market. They're the people that actually have to do the work. That's the hard work. What happens around it in the futures markets are people like my friends and I that are making effectively bets on the outcome of the game. Does that make sense?
Oh, no, it absolutely makes sense. And I'm glad that we touched on that, because in our industry, and I'm sure you've noticed it, if you talk to, for example, if you talk to a customs broker and say the word tariff, they're going to think about tariff numbers and entry filing and, the amount you're going to pay on a good. If you say tariff to a freight guy, he's going to think you're talking about a number that you've negotiated with a carrier. Almost the same thing with contracts. So if you say contract season's coming up, the initial thought may be, oh, okay, this is a direct relationship with a carrier with my freight. But it's not at all. It's a relationship between you and a market. It is exactly what you're saying, right?
Correct. That's exactly it. It's your relationship with the market itself. And I like the way you described that, versus you and a physical truck. Because the trucks are agnostic. This is all about market averages. And so effectively what you're doing is you're taking a position on the market, not on an individual transaction. And that's an important differentiation versus the physical market. And I think that's where, when I hear people push back and say, well, this won't work, most of the reasons that people think it don't work are informed by their physical view of the market. What happens if the truck doesn't show up? What happens if the trucking company decides they can get a much higher price on the other load? How do you deal with fungibility of lanes? How do you deal with 18,000 lanes? How do you deal with a load of hay being priced different than a load of electronics? How do you deal with all the service requirements? All of those things I've just described happen in the physical market, and they're tough issues to deal with, which is why you can never have a forward market or a futures market that's based on the physical market, that a physical transaction that's settled. You can never, in my view, have a standardized contract that's physically settled and traded because of all of the reasons we just mentioned. But you can take market averages. You can take market averages on anything, so long as that the index is considered sound and safe and it's not manipulated, and that there's enough liquidity, there's enough desire to trade these things, and there's enough volatility to also trade them. If you have those things, you can create a very substantial futures market, and we believe that we can answer for all of those.
I love that you're live streaming these events. What was the decision there to open these forums up to a global market?
Yeah, so look, I think, FreightWaves.com is our news outlet. And like I said, it's our traffic is quite large. A lot of what we compete with in the news business is print. Firms that started out in print journalism and sort of migrated to the internet. We're sort of a baby of the digital age, if you will. And so we don't have sort of the way that the print guys go to business. And I think there's always this mentality when it comes to streaming, because we do it at our events. Our events are profitable. These are $1 million plus revenue events to us. Basically we have $1 million investment, and we hope to basically break even and then make some margin on our events, because they're really touch points for us. And so we started streaming the events, and we thought, there was always sort of this apprehension, well, people won't show up if you stream it. And that's not true. We found that that what it actually does is that people who come to the events come for the networking. And if you're just wanting content itself, streaming is a very effective way. But a lot of times, people that can't make it to the event can actually stream the event live and not have to be in person. I think it's an important element of what we do in terms of engagement. The same idea around the Futures Roadshow is that we're doing some evangelism with some education, and we felt that in order to make it transparent, but also to hopefully help educate people what's happening and make it so that they're aware of how this works. Not that they have to know it or have to do it, but they should be aware of how it works. We felt that streaming it was the most effective way. So we've gone out, we're doing a roadshow of 9 cities, and it's streamed live. Streams are about an hour, 45 minutes to an hour, and basically it's the same presentation. The questions tend to be different, but you're effectively getting the same presentation. And we thought that was a great way to sort of engage a much broader community than just people that could show up.
I love it too, and I love that you embrace that. I worked for not a media outlet, but a more traditional broker. We were doing an event a couple years ago. I wanted to live stream the thing, and they had that same fear you mentioned. They thought nobody was going to show up. And I said to the CEO of the company at the time, have you ever heard of Coachella? He said no, because he was 70. But I was like, Coachella cost $600 for a ticket to go to. This is an entertainment event, not like a logistics informative event. And they live stream that for free and still sell out all of their tickets. I think we would be all right by live streaming this, especially when a lot of the things that we talk about and that you guys talk about are pieces of market education. We need the market to understand them to even sell them in the first place, right?
Exactly. And I think there's, people tend to be, so it's your cell phone, it's podcasting. I think we as a fundamental view is if there is a mode, if you will, we're mode agnostic, or if there is a platform where we can reach a broader audience, whether it's scheduled podcast or digital print content that's on our website with news articles or infographics. We do an infographic of the day, and basically a lot of it's what I would describe as bar trivia, stuff that's sort of pointless facts. They're maybe not pointless to some of the stories that are there, but they're a lot of times they're sort of just lightweight facts that sort of inform you. That doesn't take a lot to read. You can read it on the cell phone. And then we do things like what we talked about, the events and the live streams and stuff. And we have a radio show starting in 2 weeks with XM Radio that's on Saturdays. And so what we tried to do is reach the audience with a very sort of open view that content itself should be free, content itself should be informative, and that's enabled us to be very successful. I think if you look at media, and you look at particularly freight media, it's a very small community. Most of the freight media outlets are print-oriented. They think like print-oriented, which they'll do an interview and they'll publish it 2 months later, and literally that happens all the time. Or you send out a press release and it's 3 weeks later. And those are sort of how they go to market. The other thing that they tend to get caught up in is putting things behind paywalls, because that's how they generate money. And as advertising dollars drop off, we have to convert to paywalls. Because we're not held to the same. We don't operate with that business model. That we're not a media outlet itself, but we're a data company that is helping to build it. We have a very sort of liberal view of how broadly that content should be distributed. We have seen situations where specific media outlets in freight have taken a very aggressive approach to people that backlink or reference their articles onside their own websites or their own content. They get very offended by that. And our view is, here it is. In fact, we'll send you a bunch of content that you can post on your own stuff. And it's because we don't view our news as our secret sauce. We don't think that that's not in itself everything that we do. We don't get up every morning and think, well, how do I milk pennies out of this website? And you look at some companies that put up pop-up ads that just are so obnoxious because you have to click through them to get rid of them. They're trying to find ways to generate revenue because they don't have a business model that is sort of built for this age and time. And I think we do. And that has enabled us to operate under rules that our competitors simply just can't keep up with.
It's funny you mentioned them being angry about backlinks too, because it's almost like they don't even understand how SEO works in this day and age, which is it's propelled by backlinks and it's propelled by interaction, what's going on there. But it seems like you understand marketing too. And you understand that like for me, the reason I started a podcast in the first place was, have you ever listened to a logistics webinar and, really cared about it afterwards or wanted to listen to it? Like, no. And at the company I was with, we were getting like 25 to 75 people going into these webinars. They made it really hard. You either had to be a client or you had to pay $500 or something ridiculous. Barely anybody would come. And to me, it's like, why don't you just make, an informative podcast that's maybe even mildly edutainment, and it can get out to 2,000, 20,000, 200,000 people. It's the same way people do it in marketing. They give the content away because they realize you're not going to be able to do it yourself anyway. They'll see that you're an expert on whatever it is you're doing, and hopefully some of them will even end up hiring you.
Yeah, I think that's exactly right. I think we're moving into an age where content is freely distributed. There is very little sort of moat around it, and you have these. If I'm at a print media company or any company for that matter, you have to be concerned not of sort of who you know your competition to be, but who you don't. And the thing about the internet that's enabled these digital formats and platforms have enabled is people like ourselves who didn't have a presence 2 years. Nobody had heard of FreightWaves 2 years ago because it didn't exist. And we've got over look at Meltwater's sort of tracks of impressions, over 1 billion references in the last 3 days. Had over 1 billion broader media references. What that means is not individual references, but it means the audiences that it's reaching is over 1 billion. That means that 1 billion eyeballs, or maybe two if you multiply it times two, have seen content where our name is mentioned in it. And I think that's pretty astounding when you think about the fact we didn't exist. If you go look at the companies that have traditionally been the voice of the market, they're in the 10 to 20 million references a month. And I don't think that's great. Whoa, FreightWaves is awesome. That's not what I'm trying to say. I think at the end of the day, this stuff, our business model is incredibly easy if you sort of come into the mindset that I'm going to create high compelling content. It's not going to be mundane. It has to be opinionated. You have to have opinions because I think a lot of the folks are always afraid to sort of take a stand on something or provide any type of commentary with fear of pissing somebody off, particularly a customer. And I think you have to be objective, but you have to have a real strong opinion. You have to say things that people don't think. I think if you do those things and you freely distribute it and you don't worry necessarily about how do I make money in the short term, but you look at it as a chance to sort of reach the market and do it in a consultative fashion, I think you can be very successful with it. I think freight is an industry that is really, really slow to catch that. I think, frankly, most freight companies suck at marketing. I think when you look in the freight industry, and this is really some of the larger companies are much better at it. They deal with sort of the parcel companies. I think are exceptional at it because they're consumer marketing brands before they are business marketing brands. Even though that they're marketing to business people, they have a much broader distribution. But you look at the business to business, anywhere from say 5 billion and below, most of those companies suck at marketing, and it's because the marketing person, the person that's driving marketing, also is the sales executive. It's the same person. So the head of sales is also the head of marketing. And if you look at successful companies that are of the digital age, it's not that way. A CMO is actually segmented from your head of sales, and your CMO has one job. They wake up to think, how do I broaden the brand and enhance the value of the brand? And the salesperson is, how do I close deals? And then sometimes they're complementary, and sometimes they're actually in conflict with one another because the pressure to close a deal with a specific client may be more important short term than closing the marketing branding. Or as a marketing brand, particularly if you're a content-driven organization like we are, you have to take positions at times that are unpopular and maybe even with some of your largest clients. And you may be going counter to your own interest in some ways. And we found, and with the exception of a few just a very small sort of sample size or very small sort of instances, even in times where we've come out with something sort of favorable or unflattering to a client of ours, not only have we not lost that client, but we've done more business with them. We've actually expanded our partnership. And I think it's interesting because I think as long as you are credible and you back up your arguments with credible arguments, the companies already know they're in trouble, right? They already know they've done something, they've had a lawsuit or something that's happened, or they've made a decision, or they're providing sign-on bonuses for truck drivers that really don't work out in the favor of the truck driver. As long as you're fair to them and you present both sides of the story, but you do it in a way that is informed and not just taking pot shots at them, I think there's a level of respect that you're garnering.
Yeah, sometimes it seems like our industry is, about 20 years in the past, like it's still 1999 instead of 2019. We see that in tech and the way media is presented and all of those things. It's obvious, though, that FreightWaves is really behind tech. You've seen firsthand the power of digitization and the power of data. Last year, capacity crisis. Big term that got groundswell around it was shipper of choice. I don't know how many shippers did anything about becoming a shipper of choice, but there was a lot of talk about it, and I'm starting to see some of the bigger outlets talk about it again. And it's a good time, too, because, for example, Uber Freight, they just announced that they allow their drivers to rate facilities. That's pretty huge, man. Like, any data that truckers and carriers are starting to compile on shippers, and I didn't think shippers necessarily expected that this was going to happen to them. But where do you see tech in data helping these companies to sort of counteract what now the carriers are using to their own advantage, including the dwell times on ELDs? Carriers suddenly, the kings of fax machine, are catching up.
Yeah, so a couple of things. One is shipper of choice was a term we also liked. We actually created an award called the Shipper of Choice Awards, which basically companies will nominate shippers of choice, and the carriers themselves will vote on whom are the shippers of choice. Well, let's go out and make your case. If you think you're a shippers of choice, then you make your case of why you're a shipper of choice, and then let's get some surveys to figure out whom everyone else thinks is shipper of choice, and that's something we launched to help vet those shippers that are of choice. And I think that's sort of a qualitative measurement. To your point, it's not quantitative, but I think we're at a point right now where we have the ability to get quantitative elements. And you mentioned Uber's a site rating. J.B. Hunt has been doing the same thing with our 360 app. Doc411, which is a startup, is also doing sort of feedback and ratings of facilities. The ELD mandate has basically forced the digital footprint to what's happening. And we've gone in and studied detention by average stop location, predictive analytics on how long a truck will be stuck. Our business is different than Uber's and J.B. Hunt's because we're not, I think rightfully so, Uber and J.B. Hunt are providing this information to carriers so that they can make better informed decisions about what freight they take on their platform. And I think that's a really smart move by their part because they make the platform more compelling for carriers. I think our view is complementary in many ways because we're doing it for a much larger audience. We're not doing it for only people that sort of match inside of JB Hunt, inside of Uber, and we don't do matching. We're not the physical side of it. So our data is readily available, and hopefully it helps benchmark those studies. And so I think we're at a point right now with digitization and particularly ELDs is we now have the opportunity to sort of inform. We take this sort of emotionally driven dialogue about shippers or any issues, sort of inform it with data, which is an opportunity that we've never had before.
So shippers, they're hearing about all this stuff. They're hearing, okay, we're getting rated now. Dwell times are going to become a bigger issue. So drop freight's going to become a bigger issue. We can get all these ad values out of bringing in things like a TMS. But where should they even start? If right now they're just on spreadsheets, they're using fax machines, they're running kind of your traditional, shipping operation where nobody's really interconnected. What direction would you send them in to start on that road to digitizing their supply chain?
Yeah, it's a great question, and it's one that I think I can give you sort of the standard company line, if you will, the standard industry line about all the stuff you should do. You should, have good quality facilities. You should, pay attention when it's due. You should make sure you have ample parking. You should make sure that you have ample directions. All those things everyone knows. We're going to be able to use data to inform those decisions. So we're going to be able to use qualitative measurements, which are opinion-driven, with quantitative measurements. And we don't have this data today. The quantitative stuff is quite easy. The qualitative stuff will take some time, and we'll have it by May. But what we're able to do is sort of inform that. I would say for shippers, I think it comes down to transparency. I know it's a term that sort of gets bopped around a lot, but I think at the end of the day, so when we did our analysis of top detention markets, Fresno, California was the worst. I think on average, 300 and some odd minutes for each time the truck pulls up to the dock, 300 minutes on average. Well, there's a reason Fresno is really bad. It's because of all the produce they produce and all the cold storage warehouses they have in that community, which is going to skew much higher than a drop and hook facility at a Walmart DC. Having said that, I think if I'm a shipper and I know fundamentally that I might go from 300 minutes to 275, I think my responsibility is that I have to inform my carriers, hey, we have long wait times. You should be expected to wait. For the privilege of using your truck or for the opportunity to use your truck, we will compensate you with detention, and we have a process of communicating. I think anything that sort of brings resources in to bear that A, are transparent, and B, that a shipper sort of owns the outcome of, hey, we know we suck, or we as a business model cannot fix this issue because there are FDA inspections going in and out of the truck, requires significant inventory levels and temperature controlled. And yeah, that sucks. It's not great. It's not ideal. But it's a reality of our business. And if you want to do business with us, or you're going to do business with us, there are realities you're going to have to deal with. I think those are the conversations that should happen. I think what ends up happening is that shippers go into this deniability of, oh, we don't have bad stops. That's not us. And they don't own the problem, which I think creates a lot of stress and discomfort between the carriers because the carriers see it. They know what's happening. A shipper of choice, in my view, is one that sort of looks at the problems that exist using data to inform it, communicates those problems to their carrier base and their driver base, and lets them decide whether they want to do business with them or not. And then if they do want to do business, they make a concerted effort to figure out what could be solvable. Is it better planning? Is it better site management? Is it better scheduling? Solve the issues that sort of do it and be very transparent about those. And I think if you do that, then you could arguably say that you're a shipper of choice.
Big year ahead for FreightWaves. And you've mentioned this word numerous times, transparency. It is also the name of Transparency 19, which is happening in May. That's your big conference. You have this Freight Futures Roadshow, which I think has at least 6 dates to it, right? And you have your media outlet and all this content. So what's got you most excited for the rest of the year? Because that's a lot to choose from.
Yeah, look, I'm excited every day. And I don't mean that facetiously. This is a business that I literally grew up in. And it's stuff that I've always sort of wanted to be a part of. I wanted to do something. And I would say all of our products are toys for us. And so we are raising venture capital. And when we're out, VCs want to know what's your roadmap. And they say, well, how do you decide what features should exist in your system? Or how do you decide what speakers should come to your conferences? Or how do you decide what you should do with it? And I say, basically, we do it because, like, if we want something in the platform, we add it. And because we have such deep tribal knowledge, we know who we want to come to speak at our conferences. We know what types of articles are interesting for the market perspective. Not all of them are that interesting, but many of them are. And so I think for us, it's a chance to sort of, living our own life, and it's living a life that we're excited about. So certainly excited about Futures. We have that launching in a month and a half. I think it's certainly going to be good to see how that performs. Excited about our conferences, and I'm excited about our Sonar product. Our Sonar product's pretty cool because it aggregates all the data. And in many ways, it has become a way to sort of see what's happening. And I think those are certainly fun outcomes. But I don't think any individual sort of part of our business is necessarily more interesting than others, except that they provide different functions. There are a lot of parts of our business that I don't enjoy doing, which is dealing with contracts and legal issues and regulatory compliance issues and sitting in long, drawn-out meetings about some user function that isn't cool, right? I don't personally enjoy those, but we have staff that does. But at the end of the day, I love sort of the direction we're headed in terms of providing better transparency. I love the fact that we have an edit. I never in a million years thought I would be a news guy. I never set out to be a journalist, and I'm certainly not a journalist by trade, but I love the fact that we could take a story and articulate in a way that is factual driven, but also sort of says the other side of the story. Like, why do these digital brokers get value at these, nosebleed valuations? Well, there's a reason they do. And I think we're able to sort of sit on both sides of it and inform people using sort of the concept of we're freight people. So we get the bull time part of the story. You're not going to pull a fast one on us. We're going to call you out on it. If you're a venture-backed company, we have to understand what you do and how you differentiate yourself. But we're also understanding how VCs think. We understand how venture capitalists think. And because of that, I think we can have a much more informed view.
If people want to read into that informed view and learn more about FreightWaves, where should they go? I know we have FreightWaves.com. What else would you recommend they check out right now? I know you got the Roadshow and you're doing when's the next live stream?
Yeah, so the next live stream, I believe, is tomorrow. At the top of the page, there's a click which takes you into the live streams. So they're scheduled and they're by day. But there's also a roadshow. So if you physically want to show up in Dallas, Houston, St. Louis, Minneapolis, Chattanooga, Tennessee, and Atlanta, we have more roadshows coming. So, if you want to come in person and ask questions and network with other people, feel free to do that. It's free, but also on our website. But, FreightWaves.com is our channel. Also, we post a lot of stuff on social media, whether it's our LinkedIn address, Twitter, Facebook, so forth. And so that's sort of how we touch the market.
if you're still looking, if you're interested in the roadshow, you've got Atlanta on February 18th. We got Chattanooga on February 21st. 27th, St. Louis. 28th would be in Detroit. Minneapolis is March 5th. So plenty of opportunity there to learn all about these roadshows. Craig, thank you so much for your time. You are a shining beacon in the dark in the freight industry. I love that. I don't know. I think our views line up quite a bit. And on my much smaller end, I'm trying to do a lot of similar stuff. And the more bigger guys like you who are pushing and promoting that stuff out there, the easier it makes it for everybody else. And also the more enjoyable.
Well, I appreciate that and look forward to connecting further and seeing how we can be helpful. Let me know if I can ever do anything for you to be helpful.
Will do, Craig. Definitely.
Thanks for your time.
Now hiring. Excellent positions are available right now to work with an industry leader crafting cutting-edge, modern managed freight solutions. Look, guys, nobody can move the world alone. It takes creativity, curiosity, and collaboration between great people. Join Aborn Company's Boston area team and be a part of their vision to rethink how shippers and carriers look at their global supply chain. They offer 30 years of traditional industry experience in a free-thinking, tech-friendly, startup environment that doesn't just encourage their clients' growth, but also the growth of their most important asset, their team. Choose to be extraordinary. Choose to be the architect of your career. Just visit abornco.com, click on the Careers tab, and choose your own adventure today. We can't wait to work with you. Looking to modernize, digitize, and future-proof your supply chain? Visit day1.io for a free Day 1 Data Optimization Report. That's day, 0, 1.io. Isn't it time you got optimized? Announcing, on October 10th, 2019, Aborn Co. presents TransTech 2020, a supply chain vision and innovation conference. This event is the first of its kind in Boston. Join our panel of speakers from the worlds of logistics and technology as we discuss the modern needs of the supply chain and the merger between the physical and digital footprint that freight creates. Head on over to transtech2020.com for more details. We'll be talking about AI, automation, autonomous vehicles, blockchain, data purity and capture, future-proofing the supply chain, market conditions, transportation management systems, and so much more. Head on over to transtech2020.com for registrant and sponsored details. If you have any questions, comments, suggestions, feel free to email me at tdooner@abornco.com. That's TDOONER@abornco.com. I'd be happy to learn something new with you. For this episode and all of our previous shows, visit consultinglogistics.io or simply search for Consulting Logistics on iTunes, Spotify, or your favorite podcast player of choice. And hey, if you like the show, the best way you can give back is to share it. And if you really liked it, go on iTunes over there and rate and review. Be much appreciated. That's it. We're out of time. For Craig Fuller, I'm Tim Dooner, saying take care and happy shipping.
The breaker never wants it so. But
Hey, how'd you make out today?